Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, April 26, 2019. It's a little after 12 noon Eastern as I'm starting this video, and I wanted to highlight a sector that stands out as both potential and actually there's some actionable trade ideas right now in this sector, and that is the medical device index or medical device sector. So we're going to start out here with the ETF because that is easy one size fits all for those of you that either don't have the time, capital, or inclination to spread money around a few different names, because there's usually two ways I like to engage a bullish or bearish sector. Either pick the most bullish or bearish stocks within that sector, put together a little mini portfolio, if you will, or mini fund, let's say half dozen or more. Or you can keep it simple, buy the ETF, go long or short the ETF. It's one size fits all. And the benefit there too is you don't have to navigate earnings as you do with individual companies. One of the companies within this ETF has a big move gap up or down after earnings. It's not going to really have much of an impact because there's a lot of others. I think there's 57 total stocks in this ETF. So this is IHI. This is a weekly chart, actually, 6-day period. Every candle's 6 days. But you can see it here. We'll go to a weekly right here. I mean, it's very clear. We have a trend line that comes off the lows, the bull market lows back here. Very, very well defined. So we don't have a long-term sell signal on it yet, although we may have, I think we have an objective short entry, if nothing else, on the shorter term frames, which I'll get to towards the back half of this video. But there's IHI right now. You can see it big divergence, steep, clear divergence, and it's confirmed too. You can see the PPO turning down there. Let's go over here to weekly right there. There's a PPO, just made a bearish cross, confirm that divergence. Again, divergence in itself isn't a sell signal. Even if it's confirmed, it just helps to play out, so probably at least get a pullback to this trend line here. So that's what it looks like on the weekly. Here's what it looks like on the daily chart. We had a divergent high right here back in 2018 at the highs. I'll try to grab that without moving the trend line. Followed by about a 20% drop in the sector. We had nice bullish divergence here on the RSI. You can see at the lows, like so many things in the market, and that was a time to go long. And there's the bounce following the divergent low. And we've come full circle. And we have a divergent high recently confirmed. We were dancing around 227-ish as support, gave it up, big move down, and we hit support here. So basically this one's bounced back. Does it come all the way up there or not? You know, we start to get into some resistance around this level. I don't see right now on this particular ETF, I don't see a clear entry, but I do on some of the other individual stocks. So that's what I'm going to go over in this video for you. And keep in mind the healthcare sector and a lot of the subsectors within it, like this one, they came down sharply. So you hit oversold readings, so obviously, and at support. So a bounce was likely. We talked about that recently in the trading room, and I think in some of the videos. So let's just look at some individual names that might be poised for the next leg down here. I'm going to start out here. We're on the weekly chart before. Let's just start with the weekly charts. And what I'm going to do is on another monitor, I have a list of all the components, and I have those sorted by in descending order market cap. So we have Abbott is the big player in the field. It is a $135 billion market cap company. Here's Abbott Labs. This chart just speaks, or this chart and these patterns speak clearly to me. So back in 2015, we had a nice cleanup trend line, divergence, everything you'd like to see for a short setup. And again, a weekly chart. This isn't for your quick get in, get out, swing trade for a few days, a few weeks, maybe a couple. These are your trend trades where you get major trend changes. And so the divergence, like I always say, divergence is not a sell signal. It can build. These divergences built for years, actually, over a year there, and then finally played out, boom, with a sell signal there on a break of that trend line. So from top to bottom, that was good for correction in this big mega cap stock of about 30%. All right, so now what do we have? Similar pattern here. So bigger picture, no sell signal, at least not a long-term sell signal, but certainly one to watch for. And again, so when we get to the daily charts, we'll kind of play into how this might, a little short-term tactical trade on these right now could have the potential to morph into a longer term strategic short trade on these. So right now you can see Abbott, well, it was a great buy here. It fell back right to that trend line and it's bounced off it sharply since. We'll get to the daily charts on all these in a second. I just want to kind of paint the bigger picture first by going over the weekly charts, and then we zoom down because the weeklies aren't really that useful for honing down our entries and exits, but it does paint the bigger picture. And therefore that tells us, where, just how far this sector might fall once these trend lines break. All right, so that's Abbott, and again, I'm going through these in order. Next one up is Medtronic. That's a $115 billion company. Here's a weekly chart. Nice trend line it's dancing on here. Like everything else, it's just been diverging for a while. You can see, making higher highs, but no sell signal yet. And again, I do these videos for multiple reasons. If you're bullish on the market, bullish on this sector, well, here's a trend line that you can buy. That was a mini crash, flash crash there, but we snapped back up, closed above it. But there it is. So, you can buy pullbacks to support, but when you have these divergences, tap, tap, tap. Sooner or later, you knock enough times, that support's going to break. So after extended, prolonged divergences like this, you start to shift from a strategy of buying pullbacks to support to waiting for that support to break for a longer-term sell signal. So there's Medtronic, again, still in an uptrend long term, not broken yet, but we'll watch for that. TMO, Thermo Fisher Scientific, same story. You can see a nice, well-defined uptrend line. Had a little brief 1 week dip below, 1 or 2 week, closed, got back above it. So there's a trend line to watch. And again, same story on most of these, divergence building. DHR had a big run up lately. Big island cluster of weekly candles up there, and again, this one goes back. Here's a trend line that stretches all the way back to the bear market lows back here, or bull market lows, I should say, the end of the last bear market in late 2008, early 2019. So there's a trend line to watch, although this one's not even in jeopardy at this point in time of violating that trend line. Stryker, another nice looking one. Again, here's your primary bull market uptrend line. It's well above it now, but we have this minor trend line here. It's still a multi-year trend line, very significant. It broke down back last in the end of 2018, like a lot of other things, and bounced, made a perfect back test, and has since rolled over. So, if you look at it from the longer term point of view, this is we had divergence at that high right there. We had a breakdown, sharp correction. I'm sure that was 20-30% or more, and then perfect back test, and so far an impulsive rejection off there, while that additional high, that marginal new high, simply just extended the divergences that were already in place, and that just sets the way for a larger drop. So if you want to know where I think this one will be within the next 6 to 12 months, down here, that's about a 30% drop. Come in and kiss that long-term uptrend line. We'll go over a few more. Story's going to be the same on most. They're above trend, but some of those are, very close to that trend line. So one bad week could certainly put them below there. BDX, Becton Dixon, you can see same story like a lot of these. It had a minor trend line, like a lot of stocks. Even the major U.S. indexes had trend lines off the early 2016 lows. Breakdown, back test, boom, moved down to nice support there around 210.28. Another back test, rejection off there to come in to pick up this secondary trend line. So that's your next sell signal right there, break of that trend line. Here's your first target there. But if that trend line goes, that will have longer term bearish implications. So I would expect to move down through 210. The 210-ish area, even if we get a reaction on it, which is likely when you first tag it for the first time in a while. ISRG, Intuitive Surgical, same story. Look at these divergences, just nice, weekly charts. These weekly divergences, they tend to give you the big moves. That first drop there in the end of the last quarter 2018 was good for about a 26% drop. We pushed on up, made a marginal new high, a lot like the stock market to me. Made a marginal new high while just simply extending the divergences that were already there on the weekly chart, and then boom. And I think this is what you'll see one day soon in the stock market, just a quick move down once the tide shifts and there's a crowded rush for the exits. So look at that bearish engulfing candle on the weekly, big red candle, and this sucker dropped in just a matter of 2 weeks, about a 17% drop. And I mentioned this one recently, I think in a recent video. And the divergences again foretold that a trend reversal was coming, and now we have to break this trend line for for the next sell signal on ISRG. I can go through them all. I'll just click here. You can see I've annotated these charts. You can see the symbols. They all look the same. So, most of those are above the long-term trends. I haven't annotated them all. Let's now go to the daily charts. Do the same thing over on those that I just covered. So here's ABT, Abbott Labs. What stands out on the daily chart? Well, here's a long-term trend line. First of all, that needs to go. That will be a pretty powerful sell signal if and when that goes. We just hit it last week, bounced, and I'm going to put a level right here. Now if we zoom in, you can see all these reactions. Follow the pointer, all here, a lot of reactions. We're above it now, so on this one you'd want to see rejection. This is what I believe to be most likely a momentum fueled overshoot. You came down, you had a sharp move down, you hit support, and so did the sector and all of these stocks, healthcare sector, XBI, the biotechs, the medical devices, healthcare in general. XLV is the ETF on the healthcare sector. And they hit support and they had a bounce as to be expected. And this appears to be a momentum fueled overshoot. So if you watch this one and you fall back below this level next week, especially a big red candle, it'll be a rejection off there. Maybe, let's see if we can add a downtrend line here. Yeah, and it also took that out, so you want to see it reverse soon. Right now it popped above there. PPO is poised to make a bullish cross, but sometimes you see that happen and you get a rejection when it looks like, or even after you get a bullish cross, there is a rejection. Sometimes that does happen. So again, one to watch, and if you want to take a shot at it, just keep a tight stop. It's already overthrown that level. It shouldn't do it much more. So you could take a very aggressive, you don't have a sell signal on it. In fact, it just popped above resistance, but you could take an aggressive short. Just keep a tight stop and then swing it down. I would personally, especially if the broad market breaks those levels I'm watching on QQQ and XLK, I would tuck it away and hold out for at least 65.50 here. That's a very likely target on ABT. Alright, next one up was Medtronic, MDT. I haven't even annotated all these charts yet. Here's our downtrend line right here. It could have a little more upside. I don't see resistance other than that trend line up here at about 89.43. So I will say not one of my favorites right now, at least not on the daily chart. So we'll move on. TMO, Thermo Fisher. Scientific, here's your divergence right there, a little wedge type pattern, negative divergence, about equal highs, slightly higher high on the PPO. Breakdown of the wedge, impulsive move, little kickback rally here. PPO is still above the zero line right now, so you'd kind of be taking a shot at it. It's in no man's land. It's not really under at resistance. Next support would be that reaction low from the other day, and we have here. That's the level it needs to take out. So we had a reaction high right here, and several reaction lows right there. And so again, you're smack in the middle between support and resistance. I can't make an objective case to short it, other than maybe the sector rolls over if enough of these stocks hit support here or resistance. DHR, I don't have a lot there. There's a nice divergent low back there. I will say there's a big old gap. Technically the bottom of the gap is right here, but I see some reactions there. So either way, we can put a set of trend lines there. Big gap down. I don't know if this one's already reported yet. Maybe that's what caused that big gap up. Maybe not. I'm not sure. But there's a potential for an island cluster top if you gap down below the that island cluster there. And if you do get into that gap, you're likely going to backfill it. SYK, Striker, here's the daily chart. There's your divergent high right there. There's your trend line right here we had. Rising wedge pattern, breakdown, and boom. Looks to be flagging. It's a little bit long for a flag, but that might still, for all intents and purposes, have the same function. A sharp move down leading by an area of upward consolidation. Let's look at the volume on that. The volume's a little high. Typically you want to see volume taper off in a bear flag, and that volume's a little high. But if so, what you want to watch for, like any bear flag pattern, it's a continuation pattern, and your sell signal comes on an impulsive breakdown below. And if so, your measured target would be you take the distance to the flagpole, or the move leading down to the bottom of the flag right here, and then you add that to the highest point of the flag before it breaks down to give you a measured target. And that would probably come in here and, you know, look for give you a backfill of this big old gap right here. So there's one to watch, SYK. And again, remember, keep in mind the longer term charts, everything that I covered there. There's a trend line that comes to the left of the chart. You can see that trend line, boom, break down, back test of that trend line, and that's where we're at now. A couple more, BDX, Becton Dixon. Here we go. Right bounce back to 238.10. That's a pretty well-defined support level, or former support, now resistance. We had reactions, some reactions there, almost there. If it gets up through that level, you still have downtrend line resistance here to contend with. PPOs down below the zero line. Like everything else, it was oversold at support, so the bounce was, you know, not to be, the bounce was to be expected. But now this is, you know, TA 101 says you have two objective times you short, either a breakdown of a well-defined bearish chart technical pattern, or a breakdown of a well-defined, well-watched support level, trend line, price support, etc. Or the other option is a bounce back after you've had a breakdown. You short a bounce back to resistance. Just like in a long trend, you buy pullbacks to support. So it's TA 101. So, and it works or it doesn't work. So if you do it, you put a stop there, or you can wait. You know, there's some work to be done, and like I showed you on the weekly charts, the primary trend is still up in this sector. So you can't go crazy shorting it yet. There might be some, like I said, right now, I'd call tactical trades, pullback trade off this support level, even if it's a quick one. But it does have the potential to morph into something much more if the sector rolls over, and it would really help to see the broad market break down tech and XLK, or QQQ and XLK, that is. Next one up, ISRG, already covered that on the weekly chart. But there it is. There's your big impulsive move down, nice clean rising wedge. There's your flagpole of a bear flag pattern. This one's flagging. That looks like a nice clean little bear flag right there. So you'd want to wait for a break of the flag. Impulsive breakdown would probably take you in right around to these lows here, back from whenever that was. That's about 430 on ISRG. So let's see if that lines up with some other levels. I'd have to pick this chart apart a little bit more. Look at that. I'd probably move that target up a little bit, maybe throw some Fibonacci retracement levels, but see the divergent high and everything else. You know, last time we had a divergent high was right here, and you can see what happened from there. We dropped from high to low. That doesn't matter. It's just looks to me like this one is objective because you have a flag. Oh, and by the way, it's also a gap backfill, so there's another objective reason to short it right now, even before the flag breaks down. TA 101, gap is backfilled. The top of a gap is likely to act as resistance, and you can set a stop somewhat above it. If you do that, two things. If you're taken out, they've taken out the gap and taken out resistance, and they've also foiled the flag. The symmetry would no longer be intact. You don't want a bear flag too long, too large in relation to the flagpole. It just kind of negates the whole pattern there. So that's one that would, you could set a stop. I'm just rough estimating this. Let's say here that's about that's too little for the stock. Say 2.5% or so above where it's at now, and you're targeting at minimum about a 16-17% drop. Very good risk reward. And to counter against that, it is a counter trend trade in the broad market. So that you may get stopped out, but again, the risk reward more than makes up for that. It's not, in other words, I guess what I'm trying to say, if you're taking a counter trend trade and you have just an average risk reward ratio, like a 3-to-1, and it's a counter trend trade, might not be worth it. But to take shots at these with these very attractive risk reward, even if you have a higher chance of getting stopped out, that much larger than normal profit potential, in my opinion, kind of counters it out and makes it worth it, or worthwhile. BSX, Boston Scientific. As you can see, I have not touched this chart in a while. These are old lines here. Let me move this up. I'll give you a resistance level right here, that reaction high, and this little cluster right here, this topping pattern, 39.55 as resistance, and we could probably draw. I don't want to force these downtrend lines because there's not a lot of reactions, but they may come into play. So let's just draw that there. There it is. So you're at downtrend line resistance. There's also some price resistance here. It seemed to kind of have a little, level there that it took down, popped back up. So not one of my favorites. The indicators aren't telling me a whole lot right now, but again, keep in mind what the long-term chart looked like, and there's probably a downtrend line to be drawn right here as well. Come in and capture all these reaction lows. So that would also be a sell signal, break of that trend line as well. Baxter, BAX, there's your almost divergence, not quite, but close enough there. More important, of course, is a trend line break, and when it broke, you can see, boom, waterfall type sell-off right down to support. This one already had its bounce, so this is kind of what I'm looking like with some of these other ones. They've had a sharp leg down, clear breakdowns, they bounce. This was flagging type action, and so far it's moved back down, but it's tapped that support again about 73.84. If it breaks that, I think this one would come on down here at about 69.20. I think that's a nice target, near-term target. And again, if you want to, if the market starts to cooperate on the downside, then just set your stops at break even or whatever, or trail them on the way down, and allow for a much larger run or trade. And keep this in mind too. If you start to see the daily charts play out this way, and we go down much more, what it's going to do is take all those stocks that were dancing right on trendline support on the weekly, it's going to take those down there and give you much more powerful sell signals. And if you get that, then you tuck those shorts away. And instead of going for 10, 15, 20% gains, you're going for 30, 40, 50% gains if you're willing to ride out the ups and downs once you get those long-term sell signals. That one had divergence back here. Again, I haven't modified this chart in ages, but that's how that looked. And big, beautiful, nice little divergence, strong divergence at the lows there as well. All right, I think that's it for now because I haven't marked these up. I'll have to go through these charts and clean it up. So not a screaming short right now, but just trade ideas. I've been looking hard for trade ideas that I'm somewhat comfortable with. And I'm starting to finally see more and more short setups that look like they play out. It could play out. And again, we're seeing some sectors break, like the REITs recently, and these healthcare stocks and biotechs and all that. But until the broad market rolls over, don't expect these guys to have a waterfall type sell-off, because a lot of these are components of the S&P 500 or maybe the Dow or NASDAQ. So you kind of need cooperation there, otherwise you're swimming against the tide. So just trying to get these out there for you, and if something significant happens in the sector, or I see a compelling setup, again, I'd like to feel a little more confident that the sector itself is going to reverse before putting some of these individual medical device stocks on as official trade ideas. But again, I like to share these with you guys, and you can put them down on your notepad, and or take any ones that you like. And as always, if you have any questions on these, just drop me a question in the trading room. Gold members, any stock you want, you can get an update or chart request in the trading room. Silver members, if I do a video and it's on this sector, in the comment section below, you are welcome to ask for questions, updates, charts, price targets on any of the trades I covered here in this sector. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.